Okay, so picture this. You're all ready to buy a stock, feeling pretty good.
Mm-hmm.
You've done your research. Click that buy button.
Right.
And bam, the price instantly dips below what you bought it for.
Yep.
Frustrating, right?
Very.
Well, you've just had a taste of slippage, and today we're diving deep into a particularly sneaky kind of negative slippage.
So, what's so interesting about negative slippage is that it often reveals something a little bit more than just the usual market jitters or volatility.
Right.
It can actually be a sign of price manipulation, specifically by market makers.
Hold on now. Manipulation.
Yeah.
Are you saying that somebody might be deliberately messing with prices?
It's not as outlandish as it sounds. So market makers, they have a very unique role to play.
Right.
They're the ones that provide the liquidity.
Right.
They make sure there's always somebody to buy from and sell to.
Okay.
But this access to the order book, the heart of the market, also gives them the tools to influence prices. Maybe subtly, but...
Okay, I'm intrigued.
Yeah.
So break it down for me. How does this order book manipulation actually work?
Okay, so let's start with the bid-ask spread.
Okay.
This is the difference between the highest buy order, the bid,
Right.
and the lowest sell order, the ask.
Got it.
And market makers, they can widen this spread artificially,
making
it seem like there's less buying interest than there really is.
So they're creating this kind of facade that demand is weak.
Exactly. So imagine they pull the highest buy orders, making the bid look much lower.
Right.
And suddenly the stock appears less desirable.
Oh, so it's like they're pushing people away.
Yeah, they're kind of creating this this illusion.
I see.
Yeah.
So
okay, that's sneaky.
It is.
But how do they actually execute these manipulations?
Yeah.
Is it like some, secret society of traders huddled in a dark room?
No, not quite.
A lot of this happens through sophisticated algorithms.
Okay.
Especially high-frequency trading, or HFT.
HFT. Okay.
Yeah. And these algorithms, they analyze the order book in milliseconds.
Yeah.
And then they make lightning-fast trades to kind of create this illusion of price movements.
So it's like a high-tech shell game.
Yeah.
They're moving these bids and asks around so fast that the average trader can't even keep up.
You got it.
Wow.
And remember, the order book is constantly changing.
Right.
So these manipulations, they can be really subtle and fleeting and hard to spot.
Okay, this is starting to sound a little intimidating.
Yeah.
How can, the everyday investor compete against these algorithmic sharks?
Don't worry. There are ways to spot these manipulations.
Okay.
There are tools like MetaQuant 4D that can actually visualize and analyze these order book dynamics, highlighting unusual price and volume activity.
So we've got tools to detect this, but...
We do.
Okay. What about defensive strategies?
Right.
How can we avoid getting caught in these manipulated price swings?
Well, one of the most basic but effective tactics is using limit orders.
Okay.
So instead of buying at the market price, you set a specific price you're willing to pay.
Oh, I see.
That way you're not at the mercy of a suddenly widened spread.
So we're kind of setting our own boundaries.
Yeah.
Refusing to play their game.
Exactly. You're taking control.
I like it.
Yeah.
But what if these market makers are using other tricks?
Right.
Besides just manipulating the spread, what about those liquidity voids you mentioned earlier?
Ah, yes, a classic tactic.
Okay.
So imagine a large buy order suddenly appears in the order book.
Okay.
Right, making it look like there's strong demand. But just as your buy order is about to execute, that large order vanishes.
Oh.
Poof, gone,
Wow.
leaving you with a much less favorable price.
It's like a mirage in the desert.
Yeah.
You see the oasis, but then as you get closer, it disappears.
A perfect analogy.
Yeah.
And unfortunately, these algorithms are often designed to exploit traders who react emotionally to these fakeouts.
Yeah.
They trigger panic selling.
Wow.
Which further drives down the price.
Okay, so this is all sounding pretty bleak.
Yeah.
Are we doomed to be forever outsmarted?
No.
By these algorithmic puppet masters?
Not at all.
Okay.
The key is awareness.
Well.
Once you understand these tactics, you can start to recognize the patterns and avoid falling prey to them.
Okay, so we're turning the tables on the manipulators by becoming like market detectives.
Right. You're investigating.
Yeah, I'm ready to put on my Sherlock Holmes hat.
Yeah.
What other clues should we be looking for?
Well, sudden and unexplained changes in the bid-ask spread are a big red flag.
Okay.
Also, look for a mismatch between price movement and volume.
Okay.
So if a stock plummets, but there's very little trading volume,
Yeah.
it could be a sign of manipulation.
So we're paying attention to volume, not just
Exactly.
for price.
Volume tells you the real story.
Oh,
it's like seeing the footprints in the sand, even if you didn't see the animal that made them.
Wow, that's a great analogy.
Yeah.
Okay, this is fascinating stuff.
Yeah.
But how can we actually use this knowledge to our advantage?
Well, that's what we'll be diving into next.
Okay.
Understanding how market makers manipulate prices can actually give you insights into their potential moves, allowing you to anticipate price swings and potentially profit from them.
I am intrigued. Let's get to it.
All right. You know, one of the most fascinating parts of this whole negative slippage game is the psychological impact it has on traders.
Yeah, absolutely. We've been talking about these market makers manipulating the order book.
Yeah.
Using algorithms. But how does this stuff actually affect us, emotionally?
So imagine you're excited about a stock, right?
Yeah.
You buy in, and then suddenly the price drops right after you click buy. It feels like a punch to the gut.
I know that feeling all too well. And then you start second-guessing everything.
Yeah.
Did I make a huge mistake?
Exactly. That feeling of doubt, fear, even panic. That's what these manipulators are hoping to create.
Oh, so they're using negative slippage as like psychological warfare.
You could say that. They're preying on our natural tendency to react emotionally to market fluctuation.
Right, because when you're feeling panicked, you're more likely to make irrational decisions.
Exactly like selling at a loss.
Yeah.
Just to kind of escape that feeling of unease.
Right. Get me out of here.
Exactly, and that plays right into their hands. They can then buy up those shares at a discount.
Right.
And profit as the price rebounds.
It's a vicious cycle.
Yeah, it is.
We get spooked, they benefit.
Right.
Okay, but knowing this, how do we avoid falling into that fear trap?
Well, mindfulness is key.
Okay.
Recognize that these sudden price movements might not be reflecting genuine market sentiment. Take a deep breath, step back. Analyze the situation before you make any rash decisions.
Easier said than done, though, right?
Yeah.
When you're seeing your portfolio dipping into the red, it's tough to stay calm and rational.
I agree. That's why having a clear trading plan
and
sticking to it is so important.
Right.
When you have a plan, you're less likely to react impulsively to these manipulative tactics.
So it's about having the discipline to not let those algorithms control our emotions?
Exactly. We're taking back control.
Okay.
Remember, we have tools to help us see what's really happening.
Right. Speaking of tools, you mentioned MetaQuant 4D.
Yeah.
As a way to spot these manipulations in the last part, can you elaborate on how that works?
Sure. So MetaQuant 4D is a sophisticated platform that can analyze order book data in real time.
Okay.
It can highlight unusual volume and price patterns, like those sudden spread changes or phantom orders we discussed.
So it's like having X-ray vision in the market, allowing us to see these hidden manipulations.
That's a great way to put it.
Wow.
It helps you separate the genuine price movements from those artificially induced by market makers.
That's incredibly valuable.
It is.
But let's talk practical strategies.
Right.
What are some concrete steps we can take to avoid getting caught in these manipulations?
So aside from using limit orders, pay close attention to the volume accompanying any significant price move.
Okay.
If the volume is thin, it could be a sign that the move is not genuine.
So a big price drop on low volume, red flag?
It can be. It suggests there isn't a lot of real selling pressure.
Okay.
And the drop might be artificially engineered.
It's like those infomercials that say, but wait, there's more.
Yeah.
And then you get the product, and it's just a bunch of cheap plastic gadgets.
That's a great analogy.
Yeah.
Don't get tricked by the flashy price movements.
Right.
Look for substance. Look for volume to confirm the move is legitimate.
Okay, so we're not just sitting ducks, waiting to be manipulated. We can actually use this knowledge to our advantage.
Exactly. And the more you understand how market makers operate, the better equipped you are to navigate the market.
Right.
And avoid falling prey to their tactics.
So we're kind of turning the tables?
In a sense, yes.
Using their playbook against them?
But remember, it's not about trying to outsmart them at their own game.
Oh, I thought that was the whole point.
So what's the goal then?
Yeah. If we're not trying to beat them at their own game, What are we trying to do?
That's a great question, and it's what we'll be diving into next.
Okay.
We'll explore how understanding market maker manipulation can actually give you insights into their strategies.
Okay.
Allowing you to anticipate their moves.
I'm all ears. Let's unravel this mystery.
All right.
Okay, so we've been in the trenches. We've uncovered the secrets of negative slippage.
Right.
How market makers can really use it to their advantage.
Yeah.
All those psychological games they play.
Yeah.
But now for the big question. Can we actually use this knowledge to not just protect ourselves,
right,
but maybe even profit?
Yeah, that's the exciting part.
Okay.
While I would never advocate for, risky strategies,
right,
understanding market maker behavior can give you a real edge.
Okay.
It's like learning to read the currents of a river before you jump in.
So it's less about beating the market makers at their own game.
Yeah.
And more about understanding the currents that they create.
Precisely. Think of it this way. You're not trying to outsmart the river.
Okay.
You're learning to navigate it.
Right.
You're looking for the signs.
Yeah.
Those subtle shifts in the order book that hint at where the market might be headed.
So we're becoming like river guides instead of trying to fight the rapids.
Exactly.
Okay, but how do we actually put this into practice?
Right.
Give me a real-world example.
Okay, so let's say you're watching a stock.
Yeah.
That's been experiencing those classic negative slippage signs.
Right.
The sudden spread changes the phantom orders.
Right.
The low volume price dips.
Mm-hmm.
You've done your research?
Yeah.
You believe in the company's fundamentals?
So we see the footprints in the sand.
Yeah.
But we're not spooked because we know the animal is probably smaller than it looks.
Exactly. Now here's where your judgment comes in.
Okay.
Some traders might see this as a buying opportunity.
Oh, okay.
They anticipate that the price will rebound once the manipulation plays out.
So we're essentially betting that the market maker will eventually have to cover their position, driving the price back up.
That's one possible scenario.
Okay.
But remember, this is where risk management is crucial.
Of course, yeah.
It's a calculated bet, not a guaranteed win.
Right. So it's like playing poker.
Yeah.
You're reading the other player's tells, but you never really know what cards they're holding.
A perfect analogy.
Yeah.
You're assessing the probabilities, managing your risk, and making a decision based on the information you have.
This is such a fascinating shift in perspective. We're going from feeling powerless against these market forces to understanding them, anticipating them, and potentially even profiting from them.
That's the beauty of knowledge.
Yeah.
It empowers you. And remember, this isn't just about negative slippage.
Right.
It's about understanding the dynamics of the market, the forces at play. The more you learn, the better equipped you'll be to navigate any situation.
This has been an incredible deep dive.
Yeah.
We've gone from feeling like victims of negative slippage to understanding it as a potential signal.
Right.
A clue in the market's grand puzzle.
And as with any puzzle, the more pieces you have, the clearer the picture becomes.
That's a good point.
So keep learning, keep exploring, and never stop questioning.
Well said to our listeners. We hope this deep dive has sparked your curiosity and empowered you to approach the market with a more discerning eye.
Absolutely.
Remember, knowledge is power. And with the right tools and insights, you can navigate even the most turbulent waters.
Yeah, you got this.
Happy trading.